quite a few investors are kind of confused of what this market is trying to do. As we can see, there's been up days or uptrends, downtrends, uptrends, downtrends, occurring quite a bit over the last month and a half or 2 months. However, to the candlestick investor, even though this is very choppy trading, there is a formation setting up, which is the dumpling top. Notice the rounded trajectory. Even in the last 3 days of trading, this rounded trajectory with the highs being in a nice symmetry to the downside indicate what's happening over the long term. That investor sentiment is slowly waning. This is opposite of our fry pan bottom, where once the bottom breaks out, there's a big move to the upside. A dumpling top is going to have the same effect, except to the negative side. There's going to be a big, strong downtrend if you start seeing investor sentiment start really falling apart. That downtrend should be of the same magnitude as we saw on that big move to get down to this level. And that move down to this level was fairly hefty, so you'd consider this wave 1, wave 2, wave 3, if it starts breaking down, is going to be the same magnitude as wave 1. And even though we saw the Dow up strong today, up 120 points or so, the NASDAQ did not fare well. It's starting to curve down, with the 50-day moving average getting negative or bearish candlestick signals, such as the dark cloud, and then the close below the T-line, the spinning top, and then failure the next day, or the next 2 days now, back below the T-line. Stochastic still heading down. This does not bode well for the bulls. This is a slow deterioration of the markets. And for the option trader, you got very simple observations that every time you have an attempt to get up through the T-line in Netflix has dropped 100 points over the last few months, and now there was a basing period, and when it came to the T-line again, it broke down through this little support level, which means if we have the setup of the market doing a dumpling top, which is the prelude to a very strong downtrend, and we have Netflix breaking through a support level, the aggressive investor might want to look at buying the puts well out of the money. I think the October 90s are trading for $2.90. The 95s, they may have been the 95s. There may be a net difference by selling the 95s and buying the 90s of less than $1. So you might have a 90-cent net that if this does fall out of bed, your 90 cents will turn into $5. That's a good rate of return. This is all based upon just observing the obvious, that when you have candlestick basing signals and then they fail, there's probably the next wave to the downside. And that same scenario can be seen in commodities such as gold. When we had that dark cloud up here with a gap down, and obviously the T-line has been acting as resistance, and then we had the next gap down right to the 50-day moving average. Doji, very simple process at this point. If it opens lower, they're taking it lower. If it opened higher, they were taking it higher. In this case, when they gapped it down again, told us there was still more downside, but the 50-day moving average was not going to act as support. Now still looking for the 200-day moving average to be the next support level. This is all based upon using the candlestick signals visually and using the T-line. You can get very high probability, very successful, profitable trades without having a big degree of technical analysis behind you. That'll be it. We'll hopefully see you in the chat rooms.